So this is a great moment. We meet again for advanced financial reporting. So this is CPA Edwin Choi. I want to look at the question of a RAS sitting, which is a share-based payment transaction. The RAS sitting question that is under the August 2021 sitting under the advanced financial reporting. So remember that when we talk about share-based payment transaction, you can find a question of this kind, which is tested. So whereby right now in this question, they were saying that Beponi Limited decided to grant its 500 employees 200 share options. So each from 1st January 2021 on condition that employees still be in employment as at 30th June 2025. So before I continue, remember that we have various terminologies under share-based payment transaction. So one of the terminologies is all about the vesting condition. So right now here you can see there's a condition which we have come across, because they say Beponi Limited decided to grant its 500 employees 200 share options, each from 1st January 2021, on condition that the employees still be in employment as at 30th June 2025. So that condition that you have to be in employment from 1st June 2021 to 30th June 2025. So that is service condition. So because we said under the vesting condition, we have the performance condition and we have the service condition, whereby the performance condition is all about the employees, they have to perform to a certain performance level or to a certain profitability level, but that one is not there. So the condition they are provided here is that the employees have to be there from 1st July 2021 to 30th June 2025. So that is all about the service condition. Then there's another terminology here I can see, which we say it is all about the grant date. So remember that I said the grant date is that date when the entity, the relevant entity, and the counterparty, like now here, the relevant entity is Beponi Limited. The counterparty is all about the employees. That date when they entered into an arrangement, into a share-based payment arrangement. So which is 1st July 2021. So that is the grant date, because they say Beponi Limited decided to grant its 500 employees 200 share options from 1st July 2021. So that is the relevant grant date. That is the date when they entered into a share-based payment arrangement. So between the Beponi Limited and the relevant employees. And again, you need to understand which type of a share-based payment arrangement is this. So the Beponi Limited was giving employees, was granting employees share options. So which means that this is an equity. This is an equity, a settled share-based payment arrangement. We continue. The company has provided the following details regarding the share option scheme. So we have the year ended 30th June 2022. We have a number of employees expected to leave for 30th June 2022 is 40. The fair value of each option, the fair value of each option. So the fair value of each option is given. So according to the period from 2022 to 2025, even the number of employees expected to leave from 2022 to 2025 is provided. Then they came right and said the fair value of the option was shillings 40 as at 1st July 2021. The exercise price of the option was shillings 15 and the par value of the company's shares was shillings 10. The average market price of the share over the 4-year period is expected to be shillings 15. So what did the examiner require the student to do in this 2021 sitting, the August sitting? So the required is all about the extract from the financial statement of Pepon Limited for each of the year ended 30 June 2022, 2023, 2024, and 2025 to reflect the above transactions. So we can go to the whiteboard and do the relevant workings. So in order now to do the relevant presentation as per the examiner requirement, remember that I need to start with some short workings, but in some scenarios, again, it can be requirement in some exam situation. But for this scenario, I have to start with some workings here. So these workings means that I have to get the relevant information to be recorded in the relevant statement which the examiner was in need of. So we have the year, we have the accumulated, we have to talk about accumulated expenses. Then we have expense for the year. We have the expense for the year. We have the expense for the year. So we have the first year. We have the first year, which was starting on, so the first year was starting on 1st July and ending this 30th June 2022. So I would just say 2022 is the first year. So the first year here is 2022. The time it's ending. So 2022. So what will I do here? So the first thing I have to record is all about the number of employees which were there in Pepon Limited. So the number of employees who were there is all about the number of employees was 500. So the Pepon Limited decided to grant its 500 employees. It's 500 employees, 200 shares, options. So 500 employees. But the first year, by the end of that June 2022, the number of employees who left is 40. So number of employees expected to leave employment is 40. So what you do here, you have to take your 500, you minus the 40 who left. Then you multiply with the share options which they were granted. The share options which they were granted as per the question is all about 200. So Pepon Limited decided to grant its 500 employees 200 share options. 200 share options. So you multiply with the share options. So the 200. Then you multiply with the fair value. So under this equity settled share-based payment transaction, so the fair value which will prevail throughout the vesting period is the fair value which was there as at the grant date. And we know that the grant date here is all about 1st July 2021. And 1st July 2021, the relevant price, the relevant fair value of the option was 40. So that 40, as by the basic rule of accounting for the equity settled share-based payment transaction, the relevant price which would prevail throughout the vesting period under this equity settled share-based payment transaction is the price which was there as per the grant date. And we know that the grant date is 1st July 2021. So that is the price which we will be using for 2022, 2023, 2024, and 2025, irrespective of the changes of these prices. So which means that these prices which were given here, the 40, 35, 30, and 30, are irrelevant. So we multiply with shillings, 40. Then we multiply with a fraction of the number of years, but considering that this is all about the first year. So how many years were here? 1, 2, 3, 4. So we say the first year divided by 4. So that is a quarter. So for 2020, so I can write everything before I do the computation. So for 2023, remember that we had 500 employees in 2022, 40 left. So which means that we are remaining with 460. We are remaining with 460. So we minus the one who left in the current year, the 2023. So in 2023, 30 employees left. So the 30 employees left. So we minus 30. We multiply with the awards. We multiply with shillings 40. I said this price is the one which would prevail throughout the vesting period. I multiply now the fraction, the second year out of the total years. For 2024, remember, but by 2023, the number of employees who are remaining is 460 minus 30, which is 430. So you minus the number of employees who left in 2024. So in 2024, the number of employees who left is 25. The number of employees who left is 25. So you multiply with the awards, you multiply with the fair value as per the grant dates times the fraction. Now this is the third year over 4. Then 2025, the last year. So by 2024, we add some, the number of employees who are there is the 405. So 405, those are because 25 left, So in 2025, how many employees left? So let's check. So according to the question, we were told that 25 left. So we multiply with the awards, that is 200. We multiply with shillings 40, which is the fair value as per the grant date. We multiply now with the fraction, that is 4 over 4. So the 4th year. And that is how you were supposed to do that first working. So now let us get the relevant computations. So for the first year is all about 920. So let us do the next year. So the next year, the number of employees who are here, I can change some things here, is 430. So 430, we multiply with 200, we multiply with 40, then we multiply with 2 over 4. What are you getting?
172,000, 1,720,000.
So that is 1,720,000. So for you to get the expense for the year, you will take 1.7, this one, 1,720,000 minus the 920. So you get 800,000. So that is the expense for the year. I think you are getting that one.
Yes, that's correct, Malik.
So the next one is all about 405 times 200 times 40 times 3 over 4. So I think you are getting 2,430,000. You can confirm that. So that is fine. So for you to get the expense for the year, you take 2,430,000 minus this 1,720,000. So 2,430 minus 1,720.
710.
So that is so 2,430 minus 1,720. So that is 710. Then the last one is all about 405 minus 25 times 200 times 40. So you are getting 3,040,000. That is, which means that 3,040,000. Then you minus with 2 million for you to get expense for the year, 2,430,000.
610.
So this is 610. So what the examiner was in need of, he said that extract from the financial statements of Peponi for each of the year ended 30 June 2022. So extract from the financial statements. Extract from the financial statements. So which means that, for example, now for me to present an income statement and the statement of financial position. So the accumulated expenses, those are liabilities. Those are liabilities to the statement of financial position. This one. So this is a to statement of financial position as a liability. What we have here. Then for the expenses for the year, those one goes to the income statement. Expenses for the year, income statement as expenses. So to income statement. So for me to do the relevant statement, I will come here and say Peponi Limited. So income statement. So the income statement extract. Income statement. So that is an extract. That is an extract. So for the year. So for the year ended. So our financial years were ending on which period? So our financial year, according to this equation, they were ending on 30th June. They were ending on 30th June. But started June of various years. So 30th June. So we have 2022. We have here 2022. We have 2023. We have 2024. And we have 2025. So for the income statement, I have said we record the expenses. Expenses. So the expenses we have is 920,000. So this one. We have 800,000 for the second year. We have 710,000. And we have 610,000. So that is all about the income statement. Then for the statement of financial position, so we have Peponi Limited. We have the statement of financial position. Statement of financial position. Statement of financial position. So the statement of financial position as such. So we have 30th June. 30th June. So the relevant years. So we have 2022. We have 2023. We have 2024. And we have 2025. So 2025. So we have the relevant liability here. So the one which we have to record 920,000. So this column, the first column. So we have 1720,000. We have 2430,000. And we have 3040,000. So and that is what was required for this question of 8 marks in the other sitting 2021. That is what was required, and that marks the end of that question. And that was the question which was tested in that sitting. So what I can request is that I'm continuing with the preparation now for the December exams. That is for financial reporting, advanced financial reporting, financial accounting. And I have other guys who we have partnered with in order to cover the other units. So if you would like to join my Zoom classes, you are welcomed. And you can be able to reach me through the contact that is 07 28 760 546. So have a nice time. Remember to subscribe to the YouTube channel. And remember to share the same video to your friends in the same field. Nice time. We meet next time when I will be doing another question for this relevant sitting, that is August 2021. Thank you.